Hello, ladies and gentlemen. Lewis here one more time with Miguel from True Tax Solutions. I just wanted to discuss this little segment specifically for fighters that may be looking to later on in their career start their own gyms, schools, and the end goal being making a lot of money through competition. Miguel and I were discussing how starting an LLC or a sole proprietor um, early will help you in the long run. So, Miguel, just to kind of backtrack, what are some of the benefits of having an LLC um, early on?
So an LLC or any type of business entity that you decide to form, the sooner you do it, there's a couple of advantages. Really, a LLC will give you more of a liability protection at its most basic stage, and that's good for in the event that you are maybe training people at a different gym at the houses or something like that, and you're kind of worried if they get hurt in some way, shape, or form. That kind of offers you some protection. Um, if you're looking to maybe someday down the road open a business, a gym, uh, a dojo of some sort, it's not a bad idea for you to start taking that business, that business mind, and pushing forward with having a good structure, starting to create a little bit of credit for yourself. It'll force you to actually do your tax returns, which I know a lot of people don't do because they get their money under the books. Because we know that right now, the way the system is set up, it's what's your credit looking like? Um, how much income are you making? Are you filing your tax returns? So these are kind of things that we're forced to stay in line in order to be successful when it comes to being a business owner.
Okay.
And an LLC, if you don't do an LLC, you're still a sole proprietor. So there's a misconception of I'm not a business owner if I'm not an LLC or a corporation. You still, if you work for someone and you get a 1099, or if you fight and you get a purse, you still have to do a Schedule C, which is a business tax return on your personal tax return, and account for that money.
No.
So if you're structured, not necessarily on the books with New York State or whatever state you're in as an actual LLC, you're still a sole proprietor. You want to account for that money. Once you start accounting for that money, you can start keeping track of your expenses and deductions and reduce your tax liability. So there are a lot of little things that go along with it, simple things, but if you don't know about it, you're gonna end up paying a lot more than you should, and it'd be a lot more difficult down the road if you don't have those systems in place as far as keeping track of your expenses and being business minded.
So let's give kind of an example. I just turned pro 2 or 3 fights in, and I'm still paying, paying for my training, paying for my strength and conditioning. I'm traveling to other gyms and paying for my stay there, paying for my time there, and I'm making, let's say, $10,000 a fight. Five to show, five to win. How would having this already in place benefit me then?
Well, the key thing is that you you started making income. So for all you trainers, or I'm sorry, all you fighters out there that you're training really hard, you're putting your heart and soul into it, but you're at the amateur level just now, and you're not making income. Everything is still considered. All your expenses, they're still considered a hobby. It's still a hobby in the eyes of the IRS. Even if you put pouring your heart and soul into it, you know it's what you want to do. For the IRS, it's still a hobby. As soon as you start making money, you start generating income off of fighting or off of training other people. Now it becomes a business. So all that money that you start making and all those expenses, they start meeting on the tax return. So if you have a fight, two, three, four fights in, 10,000 a fight, 3,000 a fight, whatever it is. If you have that system in place when you start and you're tracking your expenses, the biggest issue that I see is that you'll have somebody with a purse that they had, maybe they made $10,000 or $15,000. They're reporting that $10,000 or $15,000, and they have no expenses attached to that. If you paid your manager $2,000 for getting you there, guess what? Your starting point for your taxes is $13,000 because that amount is deducted. If you are paying for strength and conditioning, if you're paying for a gym membership, you're paying for your supplements, you're buying new gear, you're buying anything that has to do with you that's going to help you incur that income, that's a deduction. So now when you start looking at it from a business standpoint or an accounting standpoint, yeah, your person, they paid you maybe $15,000, but you shouldn't be paying taxes on $15,000. If you're tracking all your expenses properly, you're really only going to end up paying taxes on maybe $8,000, $9,000, maybe less. So those are a lot of things that I noticed that fighters, it's not because it's a secret, it's because you just don't know about it.
Yeah, like some of us just don't have an understanding of where you fall in the tax bracket. Um, and this definitely helps because if I quote unquote make $100,000 a year, but to get there I spend 30,000 paying all my
Mm-hmm.
coaches and everything, I'm no longer in that $100,000 tax bracket.
Correct. Correct. So that's what, and um uh, a lot of people, they're okay with not paying taxes or not filing taxes. Listen, there are millions of people in this country. The IRS can't get everybody. So the chances of you not paying taxes on a purse and not being approached by the IRS, it's in your favor. Chances are they won't grab you, um, but there's a good chance they will. In either case, you don't want to go about it trying to just sneak away from your responsibilities, right? There's certain things that you just don't want to worry about, especially if you're training, you working a side job, and now you start getting all this purse money, and all of a sudden, 3 years down the road, the IRS, because they don't get you the year up, they get you like a few years down when all the penalties and interest have occurred, and that now instead of a $3,000 bill, you're facing a $25,000 bill. And down the line, when you have your school and you have a successful business going on, now you get hit with this $25,000 tax bill that you should have paid. You could have just paid the $5,000 like 6 or 7 years ago.
Yeah.
So you're not going to find out about it right away. Hopefully, it never comes to that. But if you set yourself up as as an honest business person, and you follow the rules, and you can also take advantage of the tax code because it is geared to help small businesses. No one likes paying taxes. I hate paying taxes. That's just one of the things that you have to do in life. Pay taxes and die.
Yes. So let's say I start my LLC early on. Will that help me overall building credit? So if I in 5 years want to open up a business, can I go to the bank and show them like, hey, look, I have 5 years as a business instead of just applying with no, just as my personal information?
Um, you'll always have an easier route doing it with your personal stuff because if you have a job and you have good credit, then right off the bat, the banks would be like, okay, we're not going to hold your business responsible. We're going to hold you personally responsible. Um, if you want to, but that all that means is that everything if you go that route, everything that happens with your business, you're personally liable for, right? It's a catch-22 because once you start a business right off the bat, if you don't have a lot of capital, which is a lot of money to start it off, you're going to have to borrow money. And if you
Yeah.
don't have a history of, of the business having, debts and paying off debts. And when I say debts, I don't mean like, buying a property or anything like that. I mean more like you can have your LLC, if you're going to start a school in a couple of years, you can have that. You can say put your cell phone on it, right? And you're going to use your cell phone. You're going to pay your cell phone. You have a legitimate business. You're already making some money. So that's a business expense. It's considered a utility. And once you start practicing like a business and working like a business, when the time comes for you to take a loan or sign a lease and they do a credit search, it's not just on your personal stuff, it's on your business as well. So it's easier to leverage the business more than your personal, your personal liability. So if you're really serious about doing that and you're looking down the road, then I would recommend actually, practice as if. Practice as if you're a big company, put all your systems in place so that when it comes time for you to go and if you have to borrow money, then you have a history of that, of already being in business and working and paying off bills. So it does look good. I would recommend going to a smaller bank because the bigger banks, all they do is check boxes. And if one of those boxes aren't checked off, they're not going to accommodate you. I know that from some of my clients that have really good businesses, made a lot of money, but because they didn't understand the business, the bigger bank said, we're not lending you any money for inventory. So you have to go to a smaller bank, a smaller community bank that builds relationships and they don't have just boxes to check off. So in essence, the earlier you start practicing and operating like a business, the easier it is when you have to take bigger steps.
Got it. No, that's a lot of great information for, a lot of people just starting out that may not know the pitfalls that we may run into in the future by not understanding some of these things. So thank you again for taking some time out to speak with me and just giving me this information to share with the world. Have a good day, man.
Thanks, man. Thanks for your time. Take care, everybody.
Take care.
Bye.